And when you talk about investment banking, the sectors of the banks, how are they going to actually segregate the different desks? Usually there are, I would say, three ways. The first is by product. So in a lot of so-called investment banks, they segregate the uh, teams by products like equities, like fixed income. So that's when you can talk to when you apply to all these jobs, you can actually find the products to be in different segments. On the other hand, there are different another side of the banks, like so commercial banks, HSBC or Standard Chartered. They are by clientele. For example, they have some sales just servicing corporate clients, some servicing banks, and a very interesting name is called non-bank FI, which is the insurance company, asset managers, and stuff like that. So I also want to quickly jump also apart from global market sales and trading, because this I see a good number of people actually is also in asset management, and in asset management, this is so-called the so-called the buy side, and for the global markets, usually it's a sell side. And as simple as the name suggests, buy side meaning that you buy stuff from the sell side. So I now work in asset management as a portfolio manager, and then what we're doing is that we take our own view and have our view to structure or like have a fund, and then we buy and sell equity or stocks, right? And the sell side, which I were back then, a couple years back, I am servicing these asset managers, and I talk to these PM as a sales to maybe share with them some market views, market ideas, but then more often than not, execution. So for example, as an asset manager, portfolio manager, I might have interested in, for example, say HSBC stock. It's been trading super low because of different restructuring news that recently happened. And as a portfolio manager, I might want to get more research from the sell side. So that's also involved in some equity research teams that you guys are also interested in. And then the sales would share with me such information, and I might or might not execute the trade through these people, the so-called sell-side, the global market sales or traders. So going back to the slide, how are the banks structured? Like I mentioned, is by different asset classes. When you look at, or when you apply, you might also see the so-called different asset classes. And usually it's equity and FICC. Equity is, well, stocks. FICC means fixed income, currency, and commodities. So stuff you can think of. There's a market to trade. Currency is pretty easy. Different currency, renminbi, yen, and commodities. It is really big. Like from metals to oil and gas to agricultural to commodities like cotton or even orange juice. So these are the different asset classes that we have been talking about. And I also saw an option during the poll that there is so-called front, middle, back office. And I'm not sure how many people actually understands what exactly middle and back office segregates. But then to put it very easy, front office are usually the risk takers, the traders, the sales, like the client-facing or the market-facing people. Mid office is someone between, including some special functions like risk. And within risk, of course, you have market risk, credit risk, liquidity risk, trade credit risk, all these different teams. And also some of the banks actually put research in mid office. Some banks put research in front office, and the pay is even different. So this is something you might want to get a sense. And back office, definitely the settlement teams, the operations teams that actually would deal with the transaction. And last but not least, I think next page we have a good slide on. Sorry, Stephen, can we go to page 7? Like the one after this? Yeah, this is a very simple slide to look at the so-called front office. And I'm pretty sure that most people are interested in working in front office because of the pay, because of the glamour, because it's glamorous, because it's fun. For sales, like my job before, what do we do? I've been working as a fixed income and FX sales for more than 7 years actually. Simple enough. We service client, we build relationship, we maintain relationship. That's like the basic so-called sales in every industry, right? But then more importantly, sales nowadays is doing way more than just so-called selling products. What we need to do is that, say, for example, you identified a client that you can onboard. You first have to make sure that your bank is happy with it. For example, that kind of credit risk that they're willing to take is the type of client that your banks wants to take. And then you need to do a lot of KYC, account opening, background check, and then that's the initial part. The second part is that you have to sign all these documents, working on ISDA agreements, working on settlement agreements, everything. It might last for like at least 4 to 8 months before you can actually start quote unquote trading. And then right before you want to start trading, you need to liaise with different risk teams, from credit risk to market risk, and saying, okay, this counterparty, how comfortable your bank is to trade with this counterparty. For example, I work for Goldman Sachs, and then I may be able to trade 5 billion with JP Morgan because we are from the same background, we are from the same jurisdiction, we have the same standard of risk. We know that JP Morgan is a safe bank to work with. We are both under Basel III, the systematic important bank. So we know that our reserve ratio is high. So quote unquote, we're safe. But for example, if I were to work with a smaller bank I've never heard of in Indonesia, then instead of 5 billion risk limit, I might only have 500 million. So these are stuff that sales also needs to liaise with risk teams. Of course, as sales, I really want to do a lot of business, but then I also need to take into account, is it safe for the bank? And also I also need to take into account if my risk people are happy. So these are stuff also sales needs to be done. And after you establish all these, I would say, pre-trade hassle, then you would need to service your client on a very regular basis, from sharing with them market updates, trade ideas, working on pitch book. And usually the more sophisticated your client is, the less you actually do in terms of pitches and market updates. But then, of course, because they are as sophisticated as you are more of an executor than an advisor, if you will. But on the other end of the spectrum, you have some less sophisticated client that they are happy to take your advice, then you might have more advisory role. So this also varies within different banks, and different banks, because they have different target clients, they would want different people. They want to hire different people, and the experience you have working for Goldman Sachs, servicing hedge funds, or working for HSBC, serving corporate banks, you might have a very similar salary, but then your experience and your stuff that you need to know or you learn from the job is very, very different, I would say. Moving on, okay, also nowadays, because a lot of different structure are not that sophisticated, we do a lot of structuring or basic term sheet drafting right after your execution. Oh, by the way, don't think that the traders and your trading assistant would do your regular hedging and execution. That was before my time. That was 20 years ago. But for the past 15 years, sales do everything from start to finish. Even, of course, after sales surface, and if you have a 3-year tenor trade, every 3 months you have a swap to exchange stuff, you would have to not do it.